I want to take you back a year, and I want to say this to you. Last year, he talked about the neutral rate were there. They went on to raise rates in December by 25 basis points. Many believe that was not a policy mistake. Here we are. The Fed now wants to indicate to the market that maybe we should tell everybody we're nearly done. Are we in the foothills of another policy error, which is communicating in that way, that that's the kind of thing they wanted to tell the market?
Well, the Fed officials are clearly worried about the gap between where they see rates going and what the market is expecting. That's a real challenge for communication, and it's something that needs to be addressed over the next few days and weeks ahead of the late October Fed meeting. I think the issue is, of course, that the uncertainty over the global economy is paramount, and that comes out clearly in the Fed minutes. And it's quite a difficult set of circumstances because we still have ongoing uncertainty over Brexit. It's possible that we could have some relief on the trade wars this week, but equally Fed policymakers are worried that there's going to be a slowdown in investment, that business sentiment is going to be damaging that, and that ultimately we see that coming through on the employment side as well. So far, employment seems to have held up reasonably well, and certainly, policymakers in the Fed were very comfortable with what they see for consumer spending, for household spending, and also they did remark on stronger housing activity as a result of lower rates. So quite a mixed view came out of these minutes, and a lot depends on what happens in the global economy, over which, of course, the Fed policymakers have little impact.
So, given what you've said, if I'm reading it right, Sarah, does that mean that you lean more in the camp that perhaps we are going to see the Fed at least go some way in matching the market expectations, rather than, for example, delivering a rate cut this month and then stopping?
Well, we certainly expect another rate cut to come soon, and I suppose the chances are rising that it comes at the end of this month. But we're not convinced that the Fed needs to continue on this rate easing cycle. There are still reasonable signs of strength in the economy. Policy does seem to be working and seem to be having an effect in the housing sector. It's very much this split between manufacturing, business sentiment and the consumer side, which is still holding up reasonably well. We think that the Fed probably doesn't need to take rates all the way down over the next few months, and can probably afford to pause in 2020.
Yeah, and it's certainly not a done deal for the markets that you get this 25 basis points at the next meeting. Can I ask you for your take? Chairman Powell says that my colleagues and I will soon announce that we will add to the supply of the reserves over time, probably at the shorter end of the curve. If it looks like a duck, sounds like a duck, quacks like a duck, is it a duck? Is this move QE or not? Have I shot the duck?
No, I mean, we wouldn't class it as QE, and I think Powell was very clear to make sure that this wasn't QE in his view. Excuse me. Of course, QE is a monetary policy tool. This is really a measure to address the disturbance that we've seen in the repo market over recent days. Expanding the balance sheet, that's clearly what the plan is. The question is, how quickly, by how much? We'll be looking for more information on that as we approach the Fed meeting.